hands in publishing too. He has published articles with ICI magazines, ICI guidance note, and audit of banks of 2016 till date. In all the editions, he has published his materials. In the reference material published by WIRC on statutory and bank audit, also has his name marked there. He has nicely and wisely handled bank audit matters of area of all levels, be it statutory, central, merger or acquisition levels. Speakers our speaker for today, I welcome him, CA Dhananjay Gokhale sir. I request all the members to kindly turn off the videos because of the technical glitches today. We have some kind of problem and technical glitches. Reason I've turned off my video, I would request everyone to turn off your videos. There is a chat box. You can always place queries and questions over there. I warmly welcome you, sir. CA Dhananjay Gokhale. Over to you, sir. I request the technical team to unmute him so that he can continue. Sir, kindly unmute yourself.
Yeah. Am I audible now?
Yes, sir, you are audible.
Yeah, actually, I have switched on my video, but I don't know why it is not showing. So I'm really clueless about that.
Okay.
Yeah. So let's see, whenever it starts, I can be visible. And first of all, thanks to Raipur branch and for inviting me over here for this talk show. And I really like the idea of talk show because otherwise it's typically a technical session wherein the speaker keeps on speaking continuously and there is not a real interaction which really happens. So it's good to have a talk show like this wherein the interaction will be on a higher side. Just to
Thank
begin,
you so much.
just to begin, I just wanted to give a brief about the standards on auditing and structure of that. I'll just take maybe 15-20 minutes to just have a cursory glance about what is the concept of standards on auditing, what is the concept of guidance note of ICA, and what is the relevance of that. So I will just share a screen and I will just show a small presentation, not really a presentation, a few slides of the presentation. And presentation I will again share with the branch, which can be distributed amongst the members also. So let me just share the screen so that we can just have a cursory glance about certain aspect. Yeah, I hope my screen is visible.
Yes.
Yeah, thanks. So firstly, when we are talking about standards on auditing, there are different types of standards. In the sense, loosely we use the word as essays, and in reality, the essays are divided into different types. So the first type is standards of quality control, that is SQC1, which we are having. Then are the essays, that is the standards on auditing, which we really refer it as essays. Then we have standards on review engagements, that is SREs, which talk about review of historical financial information. And then we have standards on assurance engagements, that is SAEs. And we have standards on related services, that is SRS. So these are basically 5 different types of standards we need to say, and these are not really standards on auditing per se. So only one portion is standards on auditing. Now, I will also like to share one background material which is published by ICA, that is SSB of ICA, which is an audit training manual. It is available for downloading on SSB's website. So all of us who are usually having in-house training which is taken about the auditing and essays, you can very well make use of this audit training material which is available online. I can also share that PDF with the branch so that it can be readily distributed amongst the members so that can be used for training purpose. Now, as far as hierarchy is concerned, in the sense from auditor's point of view, naturally the highest is the CA Act, Code of Ethics, and other relevant pronouncement of ICA. Then the second hierarchy is standards on quality control, that is SQC, to be specific SQC1. And then there are various services covered by pronouncement of SSB. And then we have assurance services and other related services. So it's a brief structure of standards which are pronounced by SSB. Within the standard also, we have certain standards which are related to historical financial information and there are certain engagements which are other than historical information. In the sense, for example, if you want to do a projection and you want to certify that, it's not really a certification per se, but it's more of assurance engagement which one has to deal with. Now, this is a broad overview about how the standards are divided. So standards which start in the series from 100 to 999, those are related to statutory audit. Standards on review engagement, that is SREs, they are in 2000 series, that is 2000 to 2699 series. Then we have SAEs, that is standards on assurance engagement, which are called as typically 3000 series, which are talking about prospective financial information, the one which I was referring to about project reports and other aligned things. And then we have standards on the related services, that is SRS, which is 4000 series, which is typically agreed upon procedures or compiling financial information data. So just to give an example of each type, today what we are going to discuss about mainly about SA 700, that is under the first part, that is standards on auditing, 100 to 999 series. So SA 700s are within that SA. We are talking about 2000 series, that is SRE, that is typically quarterly review, that is interim review, which is done for listed entities or listed banks. So that comes under that 2000 series. Then we are talking about project reports and projected information. So that is under SAE, that is standards on assurance engagement. And then we have agreed upon procedures like, for example, a bank wants you to certify only say a stock component of a particular balance sheet, or there are specific procedures which are defined by the bank which you are following and you are giving an assurance statement on that. Those are standards on the related services, that is SRS. Another point might be that there might be an assignment of compilation of financial information. So it's not really audit, but you are only a compiler. So you are only taking a compilation. For example, just to give an example, your client has given you a trial balance and he wants to have the trial balance drafted or presented in a way which is prescribed under Companies Act. So that's only a compilation of financial information which you are doing. You are not really doing the audit. So it's a simple example of what is really meant under services under SRS. So these four broad categories, just keep in mind, it's a ready chart for you to decide about which kind of service you are providing to your clients. Now going further, yes, yeah, okay, fine.
Nothing, yeah.
Yeah. Then as far as standards are concerned, these are the broad objectives about why the standards are there. So firstly is that it ensures that the information in financial statement is of high quality and acceptable worldwide. So there is a benchmark which is created. All the essays are formulated by IISB under ICI, and these are in line with IISB, and these are mandatory in nature. So it's not an optional thing. And they are required to be seen together, in the sense all essays are required to be seen together in a bunch actually, and you are not supposed to look at a particular essay in isolation. All are linked with each other by one way or the other. And typically the essays, what it transforms is it codifies the professional best practices, and it promotes uniformity and comparability amongst the auditors. So these are the basic background or objectives of essay. Now, when we are talking about codification, typically you will find that in essays, the best practices are defined. So it's not necessary that you need to follow essays in verbatim, but you need to understand the crux or essence of the essay and you need to follow that. In most of the cases, most of the SMP firms, including my firm, we are usually following essays, but only in verbal form. In the sense, we are aware about what is written in the essay. But if someone asks us to prove that whether that essay is, essay was really followed or not, we lack in documentation process. So essays are nothing like a complicated process or complex process. Only thing is that whatever you are doing, you need to ensure that that is documented, and then you have to just compare with essay whether the essay is followed or not. Most of the essays are logical in nature. The technicalities are only in wordings and not in real application. Now, as far as auditors' responsibilities are concerned, you must have noticed that when you are issuing an audit report under SA 700 format, we all auditors, we are specifying that we have conducted the audit in accordance with essays. Now, that is a very important line, that whenever you are signing on the dotted line, that is when you are signing the audit report, you yourself are admitting that all essays are followed by you and you have done the audit based on essay. So don't ignore that line. You cannot say that out of say 15 essays we have followed 10 essays and 5 essays are not followed. That is not permitted because you only have stated that all essays are followed. So if you don't follow a essay, then auditor can be held guilty of professional misconduct. Your case might get referred to DC. Means I will never wish to have anyone's case referred to DC, but that's the real, you can say, the end result of not following a essay. So just be aware about all these things. There are few things which are defined about material misstatement. So we need to understand what is the real meaning of that. Material means anything which is important, significant, or you can say substantial. And misstatement is naturally a false or incorrect statement. So when both things are combined, it is called as material misstatement in plain simple words. So first thing is that you need to understand that wherever there is a material misstatement is there, which is likely to influence the readers or the users of any financial information or anything which you are giving assurance, then that is something which you need to factor in when you are formulating your report. Now again, true and fair, I don't have to go really into detail about what is true and fair. All of us are aware about that. I will just tell one more point about that. What we are certifying under a certification or audit report is always a true and fair view, and it's never a true and correct position which you are required to really certify. So there is always a different distinguishing factor between true and correct and true and fair. True and fair, to put it in simple words, it's on an overall basis you are saying that whatever data which you are certifying or whatever data you are going to give assurance, that is you are doing an audit of financial statement, they are true and fair in a larger extent. True and correct means there is no scope for any deviation from in any way. And another thing is that those of you who might be thinking that certification is a kind of typical, say maybe 5 to 10 years back, all of us were presuming that the major distinguishing factor between audit report and certification is that audit reports are always based on true and fair view, or they express true and fair view, or you opine for true and fair view, and certifications are always true and correct. In reality, as it stands today, even certification is in the true and fair framework. So it's a fair framework which you need to follow. Even if you're doing a certification, it is not expected to be true and correct. It is always true and fairness which is expected. So always pay attention to the wording of certification which you are doing, and avoid the words like saying true and correct or confirming it to the 100% fairness. Typically, these are the users of audit report which you are issuing, like from government agency side, MCA, ROC, NAFRA. From regulator side, it can be CNAG, Reserve Bank of India, SEBI, CA Institute, that is our own institute. From others, it can be bankers or any other lender who will be relying on your report. Same way, the stakeholders, that is the shareholders and investors of a corporate, will be relying on your report. And last and most important thing is that the fraud or investigating agencies will be also relying on your report. So these are the typical users which you need to keep in mind. You need to factor those things whenever you are formulating and finalizing the report. Now, as far as standards on auditing is concerned, this is a typical framework. I've just given that in a typical flowchart about how that framework really works, and all standards are in somewhere fitted into all these frameworks. And as far as elements of assurance engagements are concerned, these are the typical 5 major elements of assurance engagement. That there is a three-party relationship is there, in the sense one who appoints you, one who uses your report, and yourself. So it's always a three-party relationship which always exists. Sufficient and appropriate evidence is something which is I will be using this word quite often. What it really means is whenever you are formulating your opinion, you need to first make sure that whether you have obtained sufficient and appropriate evidence with you, and on that basis you are forming an opinion. So sufficient and appropriate evidence is the word which is used across essays. So just understand the meaning of that. That is something which is inevitable. If you are not able to obtain sufficient and appropriate evidence, you are not supposed to give a clean report. You need to modify your report to that extent. And last but not the least, you will be always giving a written assurance report. So there is nothing like verbal which is there in any essay. Everything is written, your report and your data gathering also. As far as engagement and quality control standards are concerned, I have just divided that from 100 to 999 series. So in all, there are 37 essays which you need to follow. So it's not only 700 series, 5 to 6 essays, but you have to look at other 32 essays also, and you need to be compliant with that, because you are only giving an assurance in your report that you have done your audit based on standards on auditing. So the assurance which you are giving is about 37 essays, and not just SA 700 or SA 705 or SA 706. These are typically, I have just compiled a list of major guidance notes which are issued by institute. So besides essays, you need to be aware about the guidance note related to your subject matter. So if you're doing a bank audit, you need to be aware about the guidance note issued for bank audits. If you are doing a audit of assets and liabilities, the audit of liabilities is also having a guidance note. Audit of cash and bank balances also has a guidance note. So make yourself aware about which are the guidance note which have been issued. The major distinguishing factor between essays and guidance note is that essays are mandatory in nature, and guidance note is, to some extent, it is optionally mandatory, in the sense you can choose not to follow a guidance note provided you are having sufficient reasons of not following a guidance note. So that is something which you need to document. If you are able to document that with a logic, you can always bypass the guidance note. But that is something which is practically not that easy to bypass the institute guidance note. So in all practical senses, in almost all the cases, you need to follow the guidance note. If you're not following, you need to have reasons to justify that. As far as SA 700 reporting is concerned, I will just briefly talk just 2 minutes on each essay, that is SA 700, 701, 705, 706 and 720. See, SA 700 talks about forming opinion and reporting on financial statements. So it's a basic essay about reporting in audit, that is audit report. SA 700 talks about a clean report, in the sense you don't have anything adverse to be reported. So in that case, you can use SA 700 format, which is a clean report illustrated format. SA 705 talks about modification to opinion in independent auditor's report. Now, what does that really mean? SA 705 is something wherein you are qualifying your audit report or modifying your audit report. How you qualify or modify, I will just show you a couple of slides to just understand about the different types of modification of qualification which you can make. Then we are having SA 706. SA 706 deals with emphasis of matter and other matter paragraphs in independent auditor's report. Now, the difference or addition related to SA 700 and 706 is that in SA 706, typically auditor wants to invite attention, or he wants to draw attention of the reader of the audit report. So he has emphasis of matter para and other matter para. So let me just give a little difference between EOM and other matter para. As far as emphasis of matter para is concerned, just to give a simple example, in case of financial year 1920 audit reports, you will find that emphasis of matter para is correlating that with COVID-19 related scenario. And typically in most of the corporates, they have written a paragraph in notes on account itself as to how they have assessed receivables and payables and possible contingencies which are arising out of COVID-19 pandemic. So usually the auditor will draw our attention to that particular note if the note is already in existence. If the note is not in existence, then auditor might draft a note under emphasis of matter para. Since you're talking about COVID-19, I will just tell you a couple of points about that. See, typically post COVID-19 scenario, there are issues related to receivables as well as the business continuity or going concern issues are there. So those issues you can address in EOM. Now, whichever issues you are just drawing attention of the reader, you are not qualifying your report, but you are just highlighting a particular point in the financial statement. So in that case, you have to conclude that EOM matter para by stating that you are not qualifying the report, or you are expressing an opinion without modification. Because if you are expressing an opinion with modification, you have to go under SA 705 and not under SA 706. So EOM is something which is without qualifying a particular report. Other matter para, just to give an example of other matter para is, for example, you are doing a corporate and you are the central auditor and there are many branch auditors are there. So maybe out of say 200 branches, say 150 branches are audited by different branch auditors, 20 branches are not audited and 30 branches are audited by you. So that will come under other matter para. It is neither a emphasis of matter nor a modification to report, but it is other matter. It is something which is kind of information which you are providing. Then there is SA 720. SA 720 talks about auditor's responsibility relating to other information. Now, what is this other information? So again, let me give you an example. All of you must have seen published, financials, that is published audit annual reports. In a published annual report, typically you will have chairman's statement, you will have director's report, and then you will have certain statistical data also which is provided by the company, talking about the growth figures, talking about the composition of products or the plans of that particular corporate. Now, as an auditor, what you are supposed to do is, as an auditor, you need to also go through or rather read this other information beyond financial statement. So if you look at a typical corporate annual report, it will have chairman's statement, director's report, audit report, then financial statement, including notes on accounts. Financial statement anyway are audited by you. As far as say chairman's statement and director's report is concerned, as an auditor, you are supposed to go through that. And if there are any prima facie anomalies are there, you need to bring that to the attention of management to rectify that. If that is not rectified, you have to put it under SA 720 and you have to report that in your audit report. But you are not supposed to do audit of that other information. But it might happen that there is some absurd information or incorrect information which is provided, which is prima facie is visible. Then you have to naturally go back to the management and do charge with governance, get it rectified. If they don't rectify, put it in your report. Then SA 701, it talks about CAM, that is key audit matters. As far as key audit matter is concerned, let me just define that quickly. Key audit matters are those significant matters which you have come across while you are doing the audit. So it might be a example of key audit matter can be that you might have changed your audit procedures. There is some significant change which has occurred with respect to that particular client. Let me just give a couple of examples. Like for example, in the last year, your client was following a manual system of stock record maintenance, and in the current year, he has shifted to ERP. So the entire process flow had changed about inward and outward of material, and you have spent substantial time of your audit process in assessing that particular automation of that stock audit records or stock audit processes, stock processes. So in that case, that can come as your CAM, that is key audit matter. So you will only highlight that what is the key audit matter which you identified, and against that you have to write your comment as to how you have addressed through your audit process. Another example of key audit matter which I can give is there might be certain uncertainties which are there in financial statement which are neither modification which is warranting a modification. So globally, if you look at the key audit matter, there is one common key audit matter like deferred tax asset and deferred tax liabilities. Why it is key audit matter is there is an uncertainty which is always existent about DTA and DTL. Let me just define quickly what is uncertainty about DTA. As far as DTA is concerned, many a times it might happen that if the that particular company or entity is not able to post any taxable profit in future, practically DTA can never be realized. So there is an uncertainty which is involved. But it really doesn't warrant a modification to the report because everything is correctly followed. Accounting standard is correctly applied, so there is absolutely no issue. There is no emphasis of matter because everything is disclosed as required by accounting standard. But at the same time, there is a little bit of uncertainty which exists about the realizability of DTA, so that can come as a CAM. Now, as far as CAM is concerned, CAM, that is SA 701, is mandatory for all the listed entities, but it is optional for unlisted entities. Now, when I say optional, it gives auditor an option whether to go for SA 701 comment or not, just forgo about SA 701 comment. My view is that unless and until you really have some CAM, then only go for SA 701 if you are doing an unlisted entity. The reason being, once you opt to go for SA 701, then you have to define whichever CAMs you have found out. So suppose there is say 3 CAM which you have found out, you have to report that. But at the same time, if there is no CAM, you have to specify that there is no key audit matter which you want to report. So once you opt it, you have to say that which are the CAMs, or you have to say that there is no CAM. So for listed anyway, you don't have an option, but for unlisted, as and when required, you can opt for SA 701. Now I'll just take 2 more minutes about SA 705 just to differentiate between how to distinguish between different kinds of qualifications. This is a simple chart to just give a quick idea about when to give a qualified opinion, when to give an adverse opinion, and when to give a disclaimer of opinion. You know, it's a common thing which we always find. See, as far as qualified, all these three types of opinions are concerned. Qualified is the lowest level of qualification. Adverse is a moderate level of qualification, and disclaimer of opinion is something like you disclaim that you are not able to express true and fair view. In the sense, you are unable to express. Now, how to define that is, see this chart, let me just explain this chart first. Material, I think all of us are aware about what is meant by material. Pervasive is something which is affecting not only a particular portion of balance sheet or financial statement, but it is like, you know, having a spread across the financial statement. So for example, if you're having a case wherein stock valuation is incorrectly done, so maybe that stock is valued at market value instead of cost or market value, whichever is lower. So the entity has gone for market value method, which is more than cost. So which is the incorrect way. But it is not pervasive. It is only limited, or it is only confined to only stock portion. So that is material. It might be material because maybe stock might be impacting your profitability to a greater extent. So it might be material, but it is not pervasive. So if it is not pervasive, then you can opt for qualified opinion if financial statements are material misstatement. But suppose there is a case wherein you are not allowed to undertake a physical verification of stock. So it is material that you are not able to do a stock taking. So you are not able to obtain sufficient and appropriate audit evidence because you are not permitted. Maybe you are not given access to do a stock verification. So in that case, it is material, but if it is not pervasive, you have to go for qualified opinion. But let's take a case that you are not given access to books of accounts, you are not given any confirmations, you are not given access to bank statement. In the sense, most of the things are not made available to you. Then in that case, it is pervasive, it is also material, so you have to go for disclaimer of opinion. Let's take another case that suppose say there are lack of internal controls and there are a lot of mistakes are there wherein you are not able to really catch hold of a particular amount which is incorrectly stated because of lack of internal control, lack of automation which is there in accounts. So in that case, your financial statement might be materially misstated, and the mistakes which you found out, they are material also and they are pervasive also. They are spread across different areas. So in that case, you have to express an adverse opinion. So just keep this chart in front of you whenever there is a qualification which you have to give, and the language of qualification about qualified opinion, adverse opinion, or disclaimer of opinion can be according to that. So typically qualified opinion will quantify the amount and say that true and fair view, you will opine true and fair view except for that particular amount. Adverse opinion is something wherein you will say that it does not, you are giving an opinion of not true and fair view. In the sense, the financial statements are not giving a true and fair view. Disclaimer is that you are unable to, express an opinion. So that's the hierarchy of these three types of disclaimers. So I just thought that, I will give a little more time about SA705, especially this particular qualification. And just last one. There is a guidance note which is issued by Institute about certification. It's not today's topic, but I just wanted to draw attention to that. I will be sharing this material. So even if I am just pushing slides ahead, it's just to show you that particular slide. See, this particular guidance note is about special certifications. And this guidance note has been issued long back. It is issued, lastly, it was revised in 2016. So it's not really a new guidance note. So wherever you are issuing anything other than audit report, typically you are issuing a certificate, then you have to refer to the guidance note. You have to use the illustrative formats which are readily available to you. Typical areas wherein you can use this guidance note is, the name is guidance note on the reports or certificate for special purposes. For example, if you are doing a stock audit, if you are doing a stock verification, if you are issuing a, you can say a net worth certificate, you are issuing a turnover certificate, everywhere this format is supposed to be used. And typically what all of us do until and unless we are aware about this guidance note is that many times we are just issuing a one pager certificates. first thing, just keep one thing in mind, that the certificate is never is supposed to be issued in the form of to whomsoever it may concern. It has to be addressed to someone. As we issue an audit report, we never issue audit report by saying that to whomsoever it may concern. We address that specifically. Same logic applies to certificate also. So this guidance note gives a illustrative, guidance and elaborate guidance about how to issue a certificate. It has a couple of standard formats also, which you can really make use of, and accordingly you can issue a certificate. So I just thought that I will just give an introduction. I might have extended the timeline maybe to some extent, but I thought that I will just give a little background. So now we can start with interactions.
It is completely okay. I guess all the basics and the informations that were given were necessary. I think this slide is not pushed guidance note on reports or certificates for special purpose, so that we can see the template of the same.
Yeah, that's right. I will just add one point. As far as this guidance note is concerned, if someone has issued a certificate beyond the format of this particular guidance note, and suppose something goes wrong, I'm just giving a hypothetical case. Problem is that I'm talking very informally. I have been to Raipur, so I can talk very informally with all of you. See, many times what happens is, as a CA, we always live in a comfort zone. We always presume that client is known to us. We trust the client, and client trust to has a trust on us, and all these things go in a longer way. What is expected is that it just continues. And suppose something goes wrong actually, and there are some allegations made on you, and your case gets referred to DC. That is the worst case scenario which can happen with any one of us. So till the time you are following the standards, till the time you are following the guidance note, no one can really take any action against you, in the DC. Always keep this litmus test in your mind. So wherever you are following a guidance note, even if the guidance note is wrong, the member can never be held responsible, because institute has issued a guidance note to the member. Member has just followed it. So there is no harm in following a guidance note. Second thing is that many times we are still issuing a certificate which talks about true and correct kind of a statement. And we give a complete assurance or absolute assurance to the reader or to the receiver of that particular certificate. Those days have gone actually. It's a thing of past. Across the globe, not only in India, no one gives absolute assurance. Everyone we are always under a fair framework and not under absolute or true and correct framework. So refrain from issuing such kind of a certificates. Even if it is a paid up capital certificate, which is easiest certificate to issue, like you have to just refer the ROC record and you have to issue that. But just think of one angle, that today you have issued a certificate, and tomorrow company files a share allotment, which might be backdated because they have time. Your certificate can completely go wrong. So what you can give a assurance is only a fair assurance. You are not the director of that company to give a true and correct picture. You can always give a fair assurance that on that date you have verified the records of the company, you have verified the MCA records, and on that basis you have issued a certificate. You are not sitting in a position to issue shares or accept share application. You are not in that position. Same logic applies to stock verification. Stock verification, when you do the stock verification on that date and at that particular time, you have verified the stock. 1 hour earlier, 1 hour later, the stock may or may not exist. So what you are giving is a fair kind of assurance and not absolute assurance. So use this particular guidance note and absolve yourself. It's a kind of a professional indemnity to all of us.
Right. Okay. So should I put forward the questions, because there are a lot of queries that I already have.
Yeah.
And few can also put up in the chat box.
Yeah, sure.
So the first query is you told guidance note are not mandatory, they're optional. So I would just like to bring to your notice, and I'd just like to ask that whether SA 701 is mandatory or is optional, and how to decide in this particular regard with respect to applicability towards an entity.
Yeah. As far as SS, all ASAs are mandatory, but in SA 701, it has been made mandatory only to listed entities. And Institute has already issued a pronouncement about that also. Now, when I say that it is mandatory for listed entities, what it means is, wherever you are signing off a balance sheet or financial statement of a listed entity, SA 701 has to be followed. Now, as I stated earlier, when you're following SA 701, that is key audit matter, either you need to report a key audit matter which is there, which can be 1, 2, 3, 4, whichever key audit matters which you have come across. Or
Right.
if you say that there is no key audit matter, you have to say that there is no key audit matter. So that paragraph is mandatory. As far as other entities are concerned, which are unlisted entities, that is optional. So as an auditor, suppose I am an auditor of an unlisted entity, I can decide whether to opt for SA701 application or not. So I can go for early adoption of SA701, and I can have key audit matter paragraph in. But if I don't have a key audit matter para, my suggestion is that there is no need to give additional assurance by saying that there is no key audit matter, when that is not mandatory to you. But for listed, it is
Okay.
required. We don't have an option.
Okay.
Yeah.
Okay. And so is there any particular format of audit report given in this particular act or in this revised format of 700 series that needs to be followed, or whether one can opt for format of SA 700?
Yeah. Actually, SA700 illustrative formats are the formats for clean report. In the sense, there is no qualificatory statement which is included in that format. So it's a basic format which is given. If you have key audit matter para, then you have to go for illustrative format in SA701 so that you can add that para. If you have a modified opinion, then in that particular case, your 705 will be of help to you. Like your opinion, that para heading of opinion will change to qualified opinion. So all these changes will be there. So you have to follow SS705 if you have a modification which you are going to do. If you have emphasis of matter para or other matter para, you have to go for SS706. So those two paragraphs needs to be added. Now suppose we are having a case wherein the report is clean, but only emphasis of matter and other matter para is there. So it's a combination of SS701 plus SS706, two paragraphs are there. So you have to just add those paragraphs. Similarly, SS720 paragraph is something which you need to adopt also, in the sense that other information para. So other information will be applicable to even other entities other than corporate entities also. I will give you an example. For example, if you are doing the audit of a cooperative society, in cooperative society also, when they circulate the report amongst the member, there are certain additional data which is provided to the members of the society, maybe chairman's statement or management committee statement. So that is other information. So even SA720 will be also there. But if you're doing a non-corporate entity like say a partnership firm, and if you want to do an audit of a partnership firm in SA700, that is permitted. But then SA720 won't be there because there is nothing else which is really getting circulated. So SA720 para won't be there. So that's how you have to use the illustrative formats.
Okay. And what are the precautions that an auditor should take to decide whether an observation warrants for EOM modified opinion, or there should be a key auditing matter that is taken up? So what are the basic precautions that as an auditor we have to keep?
Yeah. See, wherever you are having a major observation, in your first thing is that when you are conducting the audit, the audit team should be instructed to just jot down all the major observations which are there, whether they are positive or negative. You can decide at the end. In the sense that observation, which is called a major observation, in the sense any material change or any material observation that you have to list down. Now, when you are taking a review, for example, you are a review partner and you are taking a review of the audit team's observation. Now, that observation, you need to bifurcate. Firstly, you need to decide that whether it was only a major observation. Second is that then you have to decide whether it is a qualified observation or not. In the sense whether it qualifies, it requires to qualify financial statement. Now, many times what will happen is the moment you communicate this adverse observation to the management or those charged with governance, they might rectify the financial statement also. So if that gets rectified, the matter gets resolved there and there itself. But the litmus test is that any observation, firstly, you need to check whether it warrants a modified opinion. If the answer is yes, you have to go for SA705. Then the second test is that if it is not an adverse kind of observation, but there is a major development like COVID-19 pandemic. So everyone has revisited the receivables position. So in that case, it can be an emphasis of matter para. Third example is that in case if it is neither an emphasis of matter para, it is not a modified opinion warranting para, in the sense there is no qualification. but it is a major observation in your audit report or your audit. You can say time spent on a particular portion is substantial, or you have tested a particular area in your audit, and you want to convey that to the readers of the audit report. Then it will be SA 701, which is key audit matter. The rest all will be normal observations which are forming part of your audit documentation. So that's how you can bifurcate.
Okay, so 700 is the basic, and then you have to keep on checking from 701, 705, 706. That do you have some other kind of material matters that has to be watched or seen?
That's right.
Okay, and as an auditor, whether an auditor can resign from an audit appointment for financial year 2019 and 20 today, like today, if I want to resign, can I do the same?
Yeah, actually, there is one more pronouncement of AASB, which is again a kind of a neglected kind of a thing, similar to special purpose, guidance note. There is a resignation of auditor. There is a small booklet, actually, it's published and it's available on AASB and Institute website also. It talks about the process of resignation, and it also defines when an auditor can resign and when an auditor is not supposed to resign. Now, let me just quickly give the background of that. See, as far as listed entities are concerned, what is expected is whenever a quarter is completed, the auditor is not supposed to resign. So, for example, once suppose in a calendar, in a particular financial year, once June quarter is completed, in July that particular auditor is not supposed to resign. So what he has to do is he has to complete the June ending quarter audit, and then he can resign. So if an auditor wants to resign, he has to tender the resignation within 45 days from the end of the quarter. So the quarter he will complete, and then he can resign. Second thing is that an auditor cannot resign for a listed entity in the last quarter. So once December quarter gets completed, the auditor cannot resign from the assignment. He has to complete that financial year assignment. That is the second thing for listed entity. Now, as far as unlisted entity is concerned, the rule is plain and simple, that an auditor can resign before conclusion of financial year. So when you are talking about 1920, as an auditor, you were supposed to resign prior to March 2020, that is 31st March 2020. Once the financial year is over, the auditor is not supposed to resign. He has to complete that particular assignment, and then he can resign. So practically, if we are discussing today, that is in December, say 22nd December, ideally you are not supposed to resign. If you are resigning, you are going against the institute guidance, a guidance note which is issued, and you need to substantiate as to why you have resigned. And that is something which is a tricky thing. Another point is that whenever you are resigning, whether after completion of financial year and all those things, or before completion, the reasons has to be stated professionally by every auditor. The reasons, like for personal reason, if someone is resigning, that is something which is viewed really seriously at institutes level also. So personal reason cannot be there. You can resign regularly by simply discontinuing from the audit, but don't resign by giving a citation as you're resigning for personal reason. There is nothing like personal reason because of which you are supposed to resign, because otherwise you shouldn't have accepted the assignment itself.
Okay, and the similar thing about accepting an audit currently, like on 22nd of December today, if I want to accept an audit, or I want to be appointed as an auditor for financial year 1920 today, so can I do the same?
Yeah, one can accept the assignment because all the things which we were discussing earlier were moderations of the outgoing auditor. If you are an incoming auditor, you need not be bothered about that, except that you need to do a compliance of obtaining NOC from the previous auditor. You need to ensure that earlier audit fees are paid off. And another important point is that if you're going to sign off the audit on say 31st December, I'm just giving a hypothetical date, then you need to first ask yourself as to whether that particular audit was really you were really able to complete that audit in next 7 days or not. And that is something which you need to prove on the record also. So if there is a case that you have already started off with the audit, your audit working papers are speaking otherwise than starting the audit tomorrow, it's better not to really venture into that, because audit working papers, emails which are exchanged with that particular client, all that might go against you.
Right. Okay. And one more thing, since the guidance notes are all optional, so if per se I have somewhere I'm not informed about the same. So what is the reasoning that I can give?
Okay, I will give you an example. For example, in a guidance note, a particular procedure is defined by in the guidance note as to how to do, say ABC analysis or stock taking of a particular client. And
Right.
as an auditor, you are having a different kind of perception about that particular client, and you are following a different kind of audit procedure. You can very well document it, and you can give a reason as to why you are not following that. Another example I can give is about typically bank audit guidance note or CARO guidance note, wherein there are certain, not opinions actually, but there are certain views which have been expressed. Now, when a view is expressed in a guidance note, if you are having a different view, you can always have that different view as compared to the view which is expressed in the guidance note. You can go with that, and you have to substantiate yourself as to why you are not going along with the guidance note. But many
Right.
times it's not that easy to go against the guidance note, because indirectly you are literally challenging a guidance note, and to justify that it's always a tricky thing. I will give one example of guidance note related to bank audit, without naming any bank or without naming any auditor. See, in case of banks, many a times for non-performing assets, the banks are acquiring non-banking assets. In the sense, they acquire that particular property in their own name, and they realize the non-performing assets. Now, the guidance note specifies that whenever NPA gets converted into NBA, that is non-performing asset, it gets converted into a non-banking asset. It has to be continued in the balance sheet at net book value. So suppose your asset value is 100 and BDDR provision is 50, and the asset acquired might be having a market value of say 70. But still you have to continue in your books of account at 50 only, and as and when that asset gets sold off, that time you can book the for the profits. So this is the guidance note. Now there can be a bank which can say that today's market value is 70 rupees, so I will recognize that asset in my books at 70. So the asset realization, the net book value is 50. So against that 70 rupees are realized. So 20 is realized and it is taken to P&L account. That's a stand which a bank can take. If the auditor wants to go along with the stand which the bank has taken, he has to justify as to why that stand is prudent, and whether it is in line with Reserve Bank of India circulars or not. So that is something which has to be there on the record. So you have to substantiate as to why you are deviating from guidance. Otherwise, it's
Okay.
not expected.
Okay, and there is, can you like elaborate on the concept of true and fair, which there is a concept of true and correct, like when the later concept is required to be adopted by an auditor while issuing the audit report or a certificate?
Yeah. See, as far as true and fair and true and correct, we discussed earlier about the difference. But let me come to the point about when true and correct might be warranted. In some cases, there are some acts which are asking the auditor to certify a financial statement as to whether it is true and correct or not. So let me just give you a background of that. See, prior to Companies Act 1956, the earlier Companies Act, the wording which was there in audit report was true and correct. So prior to 1956, we were having that kind of a scenario. There is one more issue which is pertaining to bank audits again, that we are having BR Act 1949. So I am saying these those years are very relevant. Now in the BR Act or in any act, there will be a para related to what is expected from auditors. In the sense, they specify about what should be included in the audit report. So if you look at any standard audit report, the legal and regulatory requirement includes all those questions which are answered by the auditor. So those are related to that act specific related questions. So in Companies Act also, like Companies Act 2013, there are questions asked to the auditor, which the auditor will answer in that other legal and regulatory matter para. Now for banks in BR Act, that particular para is not yet modified. In the sense, it is still having the same wordings which were drafted in 1949. So in 1949 wording, it is asking auditor to certify true balance of profit and loss account. Now, true balance is not true and fair balance. In the sense, when you say true, true is something different from true and fair. It is more akin to true and correct. So the banks are supposed to adopt that true balance concept, which is a kind of a deviation from true and fair. But in that case, auditor can have sufficient precaution taken by specifying categorically that in regulatory matter para it is true balance which is which is defined, and auditor can answer in a different way. So practically, as an auditor, ideally, even if the legal and regulatory requirement are asking you for a true and correct, you need to refrain to go from from true and fair view. In the sense, you need to stick to true and fair view only. But there
Okay.
are some legal issues are there about true balance. So one of that was BRI.
Okay. Okay. I have few questions regarding Kati.
You are not audible.
Okay. Am I audible?
Yeah, now you are audible.
Okay. So can a auditor like demand stock audit report of client performed by the bank, like while auditing for the banks? So
Yeah,
can I ask for the stock audit report to the banks?
yeah. Uh, you can definitely ask for stock audit reports of banks whenever you are doing a statutory audit or even when you are doing a concurrent audit. In fact, as an auditor, you are having the privilege and access to each and every report which relates to the financial statement. So it can be stock audit report, it can be a any other certification like cash verification which is carried out by concurrent auditors or any other auditor. So as a statutory auditor, you have every right to access the stock audit report. If the bank denies you from giving access to stock audit report, you can disclaim your report also. That stock audit report was not made available to you. And easy key to know that whether the stock audit report is available to you or not is one is that you can go through the account statement and verify whether the stock audit fees are paid to the stock auditors or not. So you can come to know that whether the stock audit is conducted or not. And secondly, in your MRL, you need to ideally take an undertaking from the bank that in how many cases or how many accounts the stock audit report was obtained. But you have every right and privilege to access the stock audit report. No one can deny that. You are muted. You are mute. Yeah.
Okay. And how to deal with the difference in stock statement as it is submitted by a bank, and if there is a discrepancy between what is submitted by the bank and in books?
Okay. See, this is a very common query which is there in bank audits. In fact, I was not expecting this query today because we were talking about SSA 100, which is a little different. Uh, as far as the deviation of, I think the query is more about the March end stock statement and the audited financial statement, wherein there is a large variances which are commonly observed. Now, as an auditor, you are having multiple options before you to choose from. Firstly, if you want to take a stricter stand, you can always say that you want to go with the financial statement figures, and accordingly, you can alter the drawing power calculation which is done by the bank. Second thing is that as far as the drawing power calculation and other things are concerned, you can always ask for the reasons for this deviation as to why there was a deviation between stock statement and the audited financials. I think someone has posted in the chat box that this query is not for bank audit, it is about from entity's point of view. Okay, so let me address from entity's point of view. So as far as entity is concerned, presuming that you are an auditor of a corporate and that corporate entity or any entity has submitted a stock statement which is deviating from the actual stock records. Firstly, you have to satisfy yourself as to whether the stock records which are maintained by that particular entity, whether they are acceptable to you or not. In the sense, whether you want to go along with the stock records or not, and what is the actual position of stock and book dates and other position. If you are really certain that there is a false information which was provided to the banks, in the sense you are also aware that let's say stock is around say 5 crores, receivables are around say 4 crores, and creditors are say around 3 crores. But that particular entity has distorted the figures by giving say 10 crores of stock, 8 crores of receivables, 1 crore of trade payable. Now, in that case, if you're certain, then you don't have to pay any attention about all these, stock records or stock statements which are submitted to the bank. But if you are not able to rely on the stock record itself, and if you feel that the stock records and books of accounts which are maintained by the particular entity are likely to be fudged, then in that case, it's better to go for disclaimer of opinion because you are not able to rely on the authenticity of the records, that is the underlying books of accounts. But if you are certain about books of accounts, you just have to ignore the what is submitted to the bank till the time you are not asked to certify that stock statement. So I'm presuming that you haven't certified the March stock statement, and you are also doing the audit of that particular entity. And if there is a deviation, then it's a altogether different issue. Then you have to definitely qualify your report, because when you certified, something else must have been shown to you.
So as an auditor, how far am I like really compelled to perform the stock verification?
See, as far as stock verification is concerned, if the stocks are material, ideally you are required to go for stock verification. To what extent you want to verify the stock, that discretion is left to the professional judgment of the auditor. So it's not required that you need to do 100% verification. Another point is that it is also not required that you need to do stock verification, at 12 at midnight of 31st March. It is not required. You can carry out any time which is convenient to you. So suppose you carry out on say 2nd of April, you need to just maintain reconciliation. In the sense you have to go backward, reconcile that, you have to verify inward and outward between 31st March and 2nd of April. If you are satisfied, that is more than sufficient evidence. You don't have to exactly do the verification on 31st March also. Even about verification, you can have ABC analysis, which can be carried out. So answering your query is that stock verification per se is not mandatory. It will depend upon materiality of that particular, stock. So suppose you are having an entity with a turnover of 100 crore, but the stock is only say 5 lakhs. So whether you verify that or not really doesn't make a difference. You can delay that process a little bit. So wherever you are doing audit, you can definitely do the stock verification. Satisfy yourself about the internal control mechanism which the entity is having. If you're satisfied with that, that is more than sufficient.
Okay, okay. And so when it comes to like financial ratios, there are many financial ratios when like stock turnover, debt equity, current ratio, etc. So if there are some alarming financial ratios, so are we actually are we actually supposed to report it?
Yeah, as far as reporting is concerned, since we are talking about SA
And
700
then
series,
where to report it? Like where to report is another important question. Like first we get such kind of things, and then where do we report it?
yeah. See, as far as audit reports are concerned, which we are talking about SA 700 series, the ratios are practically irrelevant as far as reporting is concerned. The ratios are useful for your internal analysis about that particular client, in the sense that auditing. So if you find out that suddenly a particular ratio has gone adverse, then you need to look back at your audit procedures. You might find out certain lacunas in certain business areas or certain internal controls of that particular client, and accordingly you might have to increase the audit procedures to verify whether the adversity of ratio was natural one, in the sense whether it is a correct adversity, or whether there is something which has gone wrong in books of accounts, or there is some manipulation which might have carried out. And it works in both ways. Like last year might be an adverse ratio, and this year suddenly all of out of blue moon everything has been excellent. All good ratios are there. Even that is a bad, that is also not a good sign. As an auditor, you are not supposed to
Right.
report it anywhere. It's more to help you about defining your audit procedures, not beyond that. It's an analytical review which you are conducting to undertake the audit procedures, not to report.
Okay. Also, we say like debt equity ratio, the similar should be like 2, otherwise it's not a going concern or so. So I would like to ask you like, suppose such ratios they are alarming about the going concern situation that the auditor knows and the entity or the client side is not ready to accept. However, I have an idea that something is wrong.
Yeah.
So how should I basically report that?
Yeah. See, as far as going concern is concerned, and which is prominent nowadays, especially in the background of certain issues like ILNFS and other concerns. The going concern, if you are having a doubt about going concern or continuity of that particular entity, firstly you need to approach those charged with governance, give a specific query to them in writing, ask for a written reply from their end. Once you get a written reply, and still if you are not satisfied, you can definitely make it as a part of your audit report. There is a specific mention which we are supposed to do. Now there, what you can do is you can also include the representation of the management which has been given to you. and then you can say that whatever is your professional decision is there, you can very well specify. At the same time, we need to keep one thing in mind: going concern is a kind of a touchy and tricky subject. It's not that easy for an auditor to conclude a particular entity by saying that it is not a going concern. So many a times, a kind of practical way out is that there is a elaborative note which can be given in notes on accounts. Auditor can kind of invite attention to that note, and they comment further, about his concerns about going concern. I will give an example. For example, let's presume that there is a manufacturing company is there, and which has closed the plant. In the sense, they have decided to exit out of manufacturing process, and they are now entering into a professional consultancy kind of a thing, which can happen in a typically smaller entities, which is very common thing. That maybe because of labor issues and other things or reduced margin, they just want to exit. Now let's presume that we are having two factory premises, and both factory premises are sold off. And maybe for a year or so, there is practically no activity which has been carried out in a real sense in that particular entity. Now, on one hand, you can always say that the going concern aspect is no more followed, in the sense that entity may not be a going concern. But at the same time, the directors might say that we are exiting out of this manufacturing process, and we have that expertise in that particular field, so we will enter into a consultancy business. So ideally, the management will give a note, elaborative note about their, why the factory building is hived off and what is their future plans. Auditor might say that this is the note which is given by the particular management, but still, it is casting doubts about going concern status of that particular entity. So you can very well do that, but always, there has to be a side of the management which needs to be expressed either in your main audit report or ideally in the notes on accounts. That is a better way to go about. And wherever you are 100% sure that it is not going to be a going concern, maybe because of fraud or some major setback, you can definitely say that the going concern principle is not followed.
Right, per se, because in this particular COVID times, there are a lot of industries that are shutting up.
Yeah.
And then there are things that are evident. However, the client says it will take like 3 years. If I report it, it will take hardly 1 year, that it will not be a going concern. So that was one of the reasons of placing the similar questions. And sir, in like one of a bank audit, like can you explain the difference between emphasis of matter paragraph and KM that we say? Like while drafting a report, I got it had negative profit before.
Okay. No, you are not audible. Can you repeat the question? You are not audible.
Tax, negative 100 tax liability of
your voice was cracking. Can you repeat
30 crores. But the question is, okay, so am I audible?
Yeah, now you are audible.
Okay, so how do I report it? Like the profit before tax is negative 100 crores. Yeah. The profit after tax comes out to be like positive 60 crores in a bank audit, where like they have deferred tax asset of 160 crores. That is the reason it's coming up to 60 crores. However, the bank is in loss. The final profit came out to be positive. So my question is like, where should I show this? Like in emphasis of matter paragraph, or it is a key audit matter?
Yeah. See, actually, the case which you have referred right now, I'm looking at in a little different perspective. So as far as DTA DTL calculation is concerned under Accounting Standard 22, whenever an entity enters into losses, typically even though losses are permitted to be squared off against future taxable profits, in the year when the losses are incurred against the carried forward losses, you are not supposed to recognize DTA because there is an uncertainty. So let's take a case. Taking your case further, I'm presuming that last year there were losses. Current year there is a taxable profit, because then only the scenario will arise wherein DTA will get recognized.
This is basically happening because a lot of NPAs are there.
Because of NPAs, this scenario may not be there. It might be because of writing off of certain NPAs.
So, right. Writing off of certain NPAs, that's true.
Right. So if NPAs are written off, and because of that you are getting a benefit in your taxable profits, in the sense you might be having a book profit, but taxable profits might be negative or they are reduced, so you are getting a DTA, and in turn your bank is turning positive. Now in that case, practically it is neither emphasis of matter para nor a CAM. Only thing is that CAM, I was referring to DTA from a different perspective. That CAM, you can specify that as far as DTA DTL concept is concerned, there is a uncertainty which always exists about deferred tax asset and deferred tax liabilities, and you can conclude there itself. So it's not really an emphasis of matter, because emphasis of matter is something where, here we are talking about AS22 compliance. So AS22 is complied. So wherever any accounting standard is complied, it can never become an emphasis of matter para. Key audit matter para will be there, or it can be warranted, for a simple reason that DTA DTL may not be really reversed, in the sense, if the auditor is having a visibility, or he's of the opinion that the bank is, or the entity is having a DTA to the tune of so large amount that it may not be really able to exhaust that in reasonable period. So you can say that there is an uncertainty which can always exist about DTA, and make a factual statement.
Okay. Okay, as per the revised SA 720, somebody told me like auditor can threaten a client. So is there any clause where auditor can threaten the client?
There is nothing like threatening a client. Practically, auditors are usually getting threatened. So if this is a case wherein auditor is able to threaten the client, that's a unique case.
Right.
Leaving that aside, as far as SA 720 is concerned, what it talks about is that other information, beyond your financial statement, whatever is stated by the management, and which you are aware that it is blatant, false statement, or there is no correlation with the financial statement, you can simply write your audit report. See, as an auditor, you are only having a tool of qualifying your audit report or making adverse remark. If the audit is getting threatened because of that, then it's a different story actually. There is nothing like threatening which is possible in SA 720.
Okay. Somebody also told me on a lighter note, like I want to give essay, I want to like give a qualified report.
Yeah.
So they need a report of SA 700, and I am ready to give a report of SA 705. It is qualified one. So somebody said you can average it out and then you can give a report of 701.
See, actually, usually this averaging out concept shouldn't work. If you are able to satisfy yourself on the basis of the explanation given by the management of that particular entity, if you are satisfied, you need not have to go for qualified opinion. Maybe if you are satisfied, but still if you feel that that is really important part, you can give it as an emphasis of matter para. Rather, first thing which will come to my mind to deviate from qualified report is emphasis of matter para. The reason being, I will give another example of bank audit, which doesn't really appeal me, but let me give you an example what many auditors have done. See, in bank audits, many a times the NPAs are recovered subsequent to the date of balance sheet. That is, after 31st March, the recoveries are there. There are certain banks which are, considering these subsequent recoveries or subsequent closure of the account, and they say that on 31st March we won't call these accounts as NPAs because subsequently the accounts have been closed. Now, strictly speaking, these things are not permitted as per RBI circular, because suppose the account is getting closed on say 15th April, that is the time when that NPA will turn into a closed account. So on 31st March, the position was same, and it is not really an event occurring after the date of balance sheet. But suppose the auditor is satisfied, and another thing is that in bank audit guidance note also this is not permitted. So that is another angle. But still, as an auditor, if I want to, I'm opting not to qualify the report, then I will go for emphasis of matter para. Going for key audit matter para is something which should have the key audit matter which doesn't warrant any invite. It is not an inviting attention kind of a thing, and it shouldn't be any qualificatory statement. So if someone gives this kind of a key audit matter, then it's like it's a kind of a self goal which the auditor is doing. He's inviting attention of the regulator.
Right.
The key audit matter para is given, which is really, it should have been a qualified report para. So that shouldn't be done.
Right. Okay, okay. And what are the instances where I can use other matter paragraphs? Like, and is it after the responsibility or before the auditor's responsibility statement, or there are any fixed guidelines on the same, like
Yeah, there are
on other
guidelines
matter
are there.
paragraphs
Yeah,
specifically?
there are guidelines are there. You will find the guidelines in HA 706. Typically, the other matter para comes just before report on other legal and regulatory requirement para. It comes at the end, in the sense at a in the last paras. See, typically, the first para which starts is when we start the para, first is opinion para. After opinion, it is the the subsequent paras which are there are basis of opinion. Then we have other information para. Then we have responsibilities of management. Then we have responsibilities of auditor. After responsibilities of
Right,
auditor, then other matter para will be there, and then report on
right.
legal and other legal and regulatory requirement para is there. So it's not exactly immediately after opinion.
Okay, okay, okay. So there's no particular specific guidelines regarding the same.
No, no, the guideline is there, and the paragraph has to be just before report on legal and regulatory matter para.
Okay. An auditor qualifying his audit report due to like confirmation of personal accounts or due to provision of gratuity, that is AS 15. So
Yes.
whether all these things are again required to be reported in key audit matter para.
See, as far as AS 15 is concerned, there is a very common mistake, I should say, which is found in almost all small and medium size entities. In the sense, audit I'm talking about. I'm not talking about the firms.
Right,
Many times it is presumed that AS 15 may not be really applicable. That's not the case actually. AS 15 applies to everyone. Only the form of application changes. Now let's presume that AS 15 is not followed. I'm taking a plain case. If AS 15 is not followed, then naturally you need to qualify the report. It will be under SA 705. You need to express a qualified opinion. Another point is that I'm just giving an example. Let's take an example of an entity which is having say 200 employees, and instead of actuarial valuation, they have calculated the gratuity provision on actual calculation. In the sense, suppose all employees retire or resign on say 31st March, what would have been the gratuity? So it is on a more conservative side. But again, if you go on a conservative side also, it is not permitted because AS 15 doesn't talk about actual liability calculation. It talks about actuarial. So if there is a
right,
deviation in either way, either you don't provide or you provide in excess. So if you provide in excess, it means that you are reducing your profits, which is also not a true and fair view. So in either of the cases, if AS 15 is not followed, you have to qualify the report. Now, why I'm saying qualify and not key audit matter is, see, as an auditor, if you read opinion, if you read auditor's responsibility, you will find a specific sentence that the financial statements are prepared in accordance with accounting standards or index, whatever is the case, depending upon the applicability. Now, once you
right.
see that accounting standards are followed, and if you find out a particular accounting standard which is not followed, you need to qualify the report. So it warrants a qualification and not a CAM.
Okay, totally true.
Yeah.
And then when it comes to UDIN, so whether an auditor is required to obtain UDIN before signing off the audit report?
See, as per institute regulation, you can obtain UDIN in next 15 days. But now,
Right,
practically, if you ask me, it's better to obtain that immediately. I will add a couple of
right,
points related to that and common mistakes which typically occurs, related to UDIN, which is obtained subsequent to the date of balance sheet. In the sense, we specify date of signature as the same date, but it is obtained subsequently. Now, many times
right,
the UDIN is obtained subsequently, but it is printed in your audit report. Now, that is something which is practically not possible. You cannot have UDN printed in audit report and you sign, like you have signed off a report on say 23rd of December. You obtain UDN on say 25th of December, which is permissible. But then at least you need to take a precaution that it is not included in your signed audit report. In the sense, it cannot be printed because that is practically not possible. When you have signed off, it is expected that you have signed off on 23rd December itself. Second thing is that
right,
those of us who are opting for digital signatures in audit report, practically you need to obtain the UDIN and then only apply the digital signature. And another thing is that I just want to caution, many of us who are here. The reason being, I have also heard about how to do backdated signature in, using a digital signature by changing the system date and all these things. Just keep one thing in mind: whenever you are playing around with the system, everything gets recorded and logged in. So suppose something goes wrong, these things are revealable. It's not that you are fooling around with digital signature. So don't even venture into that. If you are not able to sign for any reasons, at least don't go for digital signature. But wherever you are putting digital signature, it has to be always in live environment. And when you are doing a digital signature, there is no harm in just spending 5 minutes obtaining a UDIN and doing that. But suppose you haven't obtained UDIN, it doesn't really matter. You can obtain that UDIN later on. But then don't print that UDIN in the audit report itself. That is something which needs to be avoided. Otherwise, it's permissible.
Okay. Yeah, this particular fooling around is basically currently it's seen and it's evident. Earlier it was possible because everything was manual.
Yeah.
Now these things can be checked on.
Yeah.
One particular thing.
Yeah. One more thing is there. See, as a CA, we need to look at the future prospects about how we are going to sign off. See, practically in days to come, it might happen that manual signature will go off. In the sense, see, any malpractice which is possible by way of manually signing a document, that is practically not possible whenever you're using a digital signature. So maybe a year or two, it might happen that none of us is really signing in manual way. Now there are advantages and disadvantages. Disadvantages is something which is related to all of us. The lacuna is that we need to sign off the report there and there itself. We can't keep that pending. There is no backdating which is possible. And that is a real advantage of digital signature. So wherever we are signing off, that will get authenticated. In fact, even in banks, actually, gradually, these things will start changing. I will give you a simple example how banks change. See, in manual systems, the manual vouchers were prepared. The posting was done subsequently. So it was very easy to change a manual voucher by simply pulling out the voucher and replacing it. Now just look at today's banking. In today's banking, the entry as well as authorization happens in the system. There is no way to go back. The only way to go back to is to pass a rectification entry. Now, in case of audit report, there is nothing like a rectification audit report which is possible. So just look at the other areas wherein digitization has changed the things. In few years or few maybe few months also, it might happen that manual signature might go off. I'm just predicting something. It's not that the institute is saying something or that sort, but practically it's going to happen. Maybe because of COVID-19, it is happening rapidly. Like virtual seminar, if you talk about say a year back, no one would have really thought about that virtual seminars would have been there. But everything has changed and everyone has adopted that also. Initially, it was a little bit of difficult for speaker as well as audience, but now almost everyone has adopted that. Same way, digital signature is something, it's a question of adoption. So maybe in a year or two, every one of us will adopt that with a little pinch of salt that we need to complete our work there and there itself. We can't keep that pending. For example, if you're taking a management representation letter like MRL, typical practice was that in case of SMPs as well as SME clients, frankly speaking, many firms were there who were taking MRLs much at a later date, with a date which was the dating was earlier, but the real signature was later on. Now, if you have a MRL which is digitally signed, you have to have the digital signature there, and when you're signing off the report, you cannot delay that. So some things will improve because of this, usage of digital signature and even UDIN. UDIN also 15 days. When institute started off a year back, it was expected that gradually the number of days will reduce. Like from earlier it was kept 30, now it is 15. Somewhere down the line, it might just reduce it to say 2 days or 3 days or maybe live environment. So we never know that. So it's better to be prepared for that.
Right. So technology has basically made us powerful, and then it will make us it will challenge us somehow.
Yeah.
Okay. And currently that now that we have started reporting this way, so it is seen that we are not supposed to write subject to, and we are made to use the word except for.
Yeah.
What is the reason behind the same? And can you please throw some light on these particular kind of words?
Yeah. See, actually, to just put it in very simple words, is that firstly, all our essays which have undergone a revision, means if you notice, in most of the essays we write essay 700, and in bracket we write R, so it indicates a revised essay. See, the revision was done essentially to adopt with international, accounting standards. So the international accounting standards are having certain kind of wordings which are used. Uh, those are those were different from what we were used to, adopting earlier. So earlier we were having subject to as a common thing, and subject to your, most of the auditors used to write a lengthy essays like 1, 2, 3, 4. All those were subject to. So now it's very
Right.
specific actually, and it's the wording has changed, but the essence has remained same. That you need to give a reason, you need to quantify that what you are really giving as a qualified opinion. So those things have remained same. Only the wordings have changed. Even SA 700, the entire format was changed, but the essence has remained same. That you are still under true and fair framework. So the essence hasn't changed. Only the wordings have changed. Nothing beyond that.
Okay. And is the institute the final prerogative authority for everything that essays deal with, or
Yeah.
there is some other authorities that look for the same?
Yeah, as far as the essays are concerned, institute is the final authority. And see, the typical process which is adopted globally is that there is an international body, that is IAASB. IAASB, if there is any new auditing standard which is introduced, or wherever existing auditing standard is changed, typically firstly it is changed in IAASB. Each country has a representation over there, like even our institute represents over there. So it is
Okay.
deliberated, and then it is changed. And once it is changed, typically all the countries AASBs adopt that. Like in our case, our AASB adopts that. So
Okay.
it's a kind of undertaking which is given by all the institutes across the globe, that wherever there is a change in international auditing standards will take place. Uh, it will be adopted to the extent verbatim. If there is any change which is made, you will find that in certain essays, just for academic interest, I'm saying, in certain essays, at the end there is also a paragraph which specifies as to where the deviation has occurred as compared to the international accounting standard. So, sorry,
Right.
auditing standard. So wherever one has to just understand from academic point of view as to where we are deviating from global auditing standard, we can refer to our own essays. Frankly speaking, India has adopted essays almost verbatim, barring few exceptions. I will give a couple of examples. See, as far as India is concerned, we are having certain unique practices. Like in our case, all corporates are mandatorily audited by chartered accountants. uh, in some countries it is optionally audited, in the sense they have certain barriers. Like tax audit, we are having barrier. If you don't have a turnover above 5 crores, tax audit is not required to be conducted. So similarly, in some countries for corporates also there is a similar thing is there, that if you don't have a particular turnover, or if you don't have a particular kind of paid up capital, the audit is not mandatory. So in those cases, as far as consolidated financial statements are concerned, the international auditing standards are different, because they presume that you might have a step subsidiary or a subsidiary which may not be audited at all. In India, we don't require that. In India, everything is audited. So to that extent, the standard related to CFS is changed, because we have a different kind of environment. So only those minor changes will happen based on country specific practices. Otherwise, usually international auditing standards are adopted. But if you're talking about authority, for all of us actually, when we are doing the audit, the authority is institute. Within institute, the auditing and assurance standard is the one which does that. But now actually, because of NAFRA, unfortunately, institute is not in a position to amend any standards on auditing. We are not in a position to introduce any new essay. So any essay modification or any essay introduction will be now with the consent of NAFRA. So that's a
Okay.
little change, we can say. But frankly speaking, NAFRA is not issuing standard. Standards will be issued by institute, approved by NAFRA. That's the real story.
Story behind the same.
Yeah.
Okay. Sir, in our area, there are many clients, like they're having few dormant companies. Now, such companies, they have only few financial transactions, but they really don't carry on any kind of business activities. As such, there is no going concern. So, should we report the company is not carrying business like they're not carrying any business, should we report this in our audit report?
Yeah. I will address this query by adding one more angle. Typically, in such companies, most of the time it is practically found that the auditor only prepares the financial statements. He only drafts the notes on accounts and he does everything. So what is really expected is notes on accounts belong to the client, in the sense belong to management. So it depends upon what management's view is there as far as going concern is concerned. So even if practically a CA is drafting that note, he needs to understand that note doesn't belong to him. The note belongs to the management. If he doesn't agree with the management, then he has to specify in the audit report itself that there is a serious doubt which is casted upon the going concern claim of that particular client or in that auditing. I have never seen a dormant company management saying that they are agreeing that it is not a going concern. They keep on mentioning, or they, in the sense, into bracket, we keep on mentioning that they are exploring the business opportunities, all those things. And the same para gets carried forward since, maybe a decade or more than that also. Try to refrain from that. And at least if you're putting that para, you can always have a qualification which you can state in the audit report by inviting attention over there and say that, for last 10 years, there hasn't been any activity. So it is casting a serious doubt about management's claim about going concern. And qualify a report. See, qualifying is something many times the auditee also doesn't understand. He's fine with any report which is issued by the auditor. You don't have to really tell him also. You can simply state that is what is written in standard, essay, and we are following the essay language, and just close the matter. No one is really there to ask you about why you have qualified a report, especially in dormant companies.
True. Sometimes it's like the client himself, he channelizes things via one or more companies, and he has made few. It's not always the auditor who is streamlining everything. Sometimes it's also the client who has rooted up one parent company and many other companies.
Yeah.
So yes, and sir, coming on to the risk factor, like if there is high level of risk, where it should be stated, like KMP, or should we take it to EOMP?
See, if it's a high risk area, but if you haven't found yeah. If it is a high risk area, and if you have conducted an audit procedure in that high risk area, but you have satisfied yourself, in the sense you are satisfied with the internal control, even if it was a high risk area. In that case, you can surely include that in key audit matter para. For example, you might have a case wherein there is a chance of higher level of estimation, judgmental error might be there. Like sometimes you have a financial instrument which is a kind of a perpetual instrument. So there are certain assumptions which are taken, and you can definitely go wrong. Now in that case, you can include that in key audit matter para, because the reason being, there is a possibility of high risk, but it is mitigated by the management to your satisfaction, so you don't have to really have emphasis on matter para. But just by having high risk area doesn't really warrant CAM. It depends upon your professional judgment as to whether you consider it as a material thing as far as the financial statements are concerned, and whether your audit procedure was having that particular area as a key area for your audit. Then only the CAM will be really invoked.
Okay. Because I always came to conclusion like high risk area, you have to go for CAM.
Not always, actually. It depends. It depends upon many factors, actually. Firstly, materiality. Second is how much time you spend. In the sense, from your audit procedure point of view, whether you really consider that as a key area.
Okay.
Yeah.
Okay. So I would also like other fellow members to like put your queries in the chat box if you have some, so which can be taken up.
Yeah.
Also, sir, I would like to ask, if I disclaim, should I also place the similar thing in CAM?
Yeah, actually, see, typically wherever you are having a SA70 in the sense disclaimer or modification, usually it's better to carry out in CAM. The reason being, in CAM, you can give how you address that particular disclaimer. CAM is more speaking kind of a thing. It's usually in a tabular format that you identify a CAM and you give an answer to that. So suppose you are having a serious qualification or any adversities like modified opinion, if you are given, you can always include that in CAM. It's an advisable practice.
Okay. Okay. Any specific guidelines that you have to throw, or any specific light that you have to throw on the topic of this particular financial reporting?
See, first thing is that as far as this financial reporting is concerned, all of us are having a very bad habit of using the last year's Word file and just changing the year. So refrain from doing that. Many a times,
Okay.
Like if the company or the entity is having a profit, if you're talking about a corporate and SA 700 is the format, if last year there was a loss and current year there is a profit, even that word is not changed. I have seen certain audit report which, to get out of this issue, they write profit slash into bracket loss. So, the reader has to decide whatever is there you have to pick up. That is something which is not expected. The easy way out is that whenever you have your audit report drafted, just, have one of your articles sit with you or make two articles sit together. Just ask them to read out SA 700 illustrative format and ask them to mark wherever there is a deviation is there. And as a signing partner, you can take a call. Because many a times there are certain lines which are missed out, there are words which are missed out, because even while doing a copy paste also many a times we tend to lose certain wordings also. So it's always better to verify your own audit report with SA 700 or SA 704, whichever is the illustrative format which you are using. So always weigh your audit report with the illustrative format. It might happen that last year you might have done some mistakes. So it's not required that you should continue with the mistake. You can always rectify that silently. It's not
Right.
really also required that whenever you are rectifying something, you need to also take your client into confidence. Every year is a new year. So you don't have to really think about what has happened in the past, but it's always better to verify that. Another important point is that whenever you are concluding the audit, always make it a point that whichever documents which you are supposed to be obtained prior to audit, you are obtained that prior to that particular date. That is, suppose today you are signing off, you are not supposed to keep any data or record which is obtained subsequent to say 23rd December. That is something which will go against you. There is a time limit which is given for compilation of data, but that compilations means rearranging your file. It doesn't mean that taking the record additional documentation record on your file. And last thing is that don't shy away from qualifying a report. In the sense, as an auditor, even if you don't qualify a report, it doesn't give you any assurance as a continuity as an auditor. It depends entirely upon the auditing. So whenever you are having an assignment which you are concluding and which gets concluded on the date of AGM to be precise, don't shy away from expressing your opinion, whether it is a modified opinion or it can be an emphasis of matter. Always make it a point that your report is speaking report rather than a stereotype report, so that you don't have to repent in maybe next 2 years or 3 years. It might happen that you might have found out something, you have missed out that from reporting, and after 2 to 3 years you might realize that you should have reported that somewhere, which would have saved you. So don't shy away from that. The moment you are suspicious, you need to probe into that, change your audit procedures. And last thing is that the best way to comply with standards for SMPs especially is that just have a list of standards on auditing in front of you. For each and every audit, at least write whether you have complied with that particular standard or not. It can be just a one-page checklist having 37 standards on auditing. Just write before, in front of that standard, that whether you are compliant with that or not. If you're not compliant, you need to self-rectify yourself. Don't go ahead. So that is the easiest way for SMPs. And last thing, if you are going through the essays, you might find that it's too technical nowadays. Why I'm saying nowadays is that the revised essays are little technical in nature, especially the wordings which are used. Just understand that all these words are taking verbatim, almost verbatim from international standards. So some words are there which may not be really gelling with the type of English words which you are using. So don't get frightened because of some technical words which are there. Just understand that why that standard is there and how you are able to apply that. So that application of essays will be much easier. And don't run away from essays. essays are going to be going to be there with the auditor. We can't reduce the essays. In fact, the essays are going to get increase in days to come. So be prepared for that.
Right.
And that's it.
Right.
That's what I will like to say.
Okay. Okay. Thank you so much. Do we have some queries in our chat box? Let's see to it. Anybody who's interested to give a query can give in the chat box. Otherwise, we are just planning to close off the session. One thing on a lighter note, I could add, like, since you told that we are supposed to like bring to notice something was missing in the last years. I've seen one of the cases where I tried to bring something to the notice and then it went to the most exaggerated level. So sometimes it's like using your conscience also.
Yeah, that's right.
So uh, I think none of the questions are coming in the chat box as such.
Yeah.
Okay, so I would like to add this, like Dhananjay Gokhale sir, like it was wonderful to have you today evening. We started off late. It was written 4 p.m. Then we started at 5. The time changed due to technical glitches. Things did not start that well, but however, we continued well and it was a great time with you. These slides that the information that you thrown, the slides, the way it is presented. Thank you for everything. Thank you, all the people, all the fellow members who have joined in. There were continuous people who have waited in the waiting room to enter. There are people on YouTube. I would like to thank all of you and specifically to the guest speaker. It was brilliant to have you. Everything was very, very informative and well explained elaboratively. Thank you so much, sir, for giving your time. And thank you, everyone. That's all. If this would have been a live meeting, everybody would have like moved to eat something. So similar would go on at your places. Thank you so much, everyone. Thank you so much,
Thank you
sir.
very much. Thanks a lot. Thanks to all. Thank you.
Okay. Thank you, everyone. That is how we close. And thanks to all the participants who have consistently been here. Thanks a ton to everyone. Yeah.
Yeah.
And we would like to have your presence physically over here in some particular seminar, sir.
Yeah, sure. It will be my
Yeah.
pleasure to be there at Raipur. I had been there earlier also, and let's see, how the physical seminars will go on in coming months.
Right. Right, right, right. Okay, stay safe, stay home, and bye, everyone.